Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell. I'm your host Nickey Mirchandani. While Indian equities are set for a positive start in the earning heavy week, RIL and ICICI Bank earnings is expected to provide impetus to the bulls. SGX Nifty indicates a mildly positive start coming in for the broader index. US major indices closed Friday on a downturn for the week amidst earnings heavy season. Asian shares at this point of time have caught on to a cautious start in a week packed with economic data and central bank meetings. FIIs, they've sold shares worth 2,116 odd crore. It's a big number, needs to be seen if it's a one-time off or harbinger of a bigger sell-off to come into the markets. DIIs at this point of time have also picked up, on the other hand, equities to an extent of around 1,632 odd crore. But let us get going and discuss some stocks and studies today with Prashant Sawant, co-founder at Catalyst Wealth. Good morning there, Prashant.
Good morning, Nickey.
So how is the week, expected to stack up at least the Monday? Will bulls drive the rally today? Do you expect momentum building up? Because both ICICI Bank and RIL Industries have both managed to surprise them, in terms of their earnings. Solid set of numbers there. You think, Nifty would be able to scale past that 17,800 mark, 17,000 new highs coming in this week? What's your assessment?
So, Nickey, I always suggest one thing. Instead of predicting, the best way is to follow the price. So what should be the approach? Now, last week, a number that I was tracking on Nifty April futures was 17,550. And we managed to hold that. We made a low of somewhere around 17,580. And we continued to close above 17,600, which was a positive. I think the pre-open definitely shows a positive move. But my suggestion would be to wait for the first 1 hour. And today, based on the results of ICICI and Reliance, I think it will be a major impact. The 1 hour high and low will hold crucial for the whole week. This is from the expiry perspective, that is from till Thursday. And according to me, if we cross the first 1 hour high in any of the index, that is Bank Nifty or Nifty, you can definitely go long with a stop loss slightly below the day low. That should be say around 20-25 points below Nifty. And for Bank Nifty, say around 50 to 80 points below the day low. That should be the simple strategy. As far as the resistance levels are concerned, I think on April futures, 17,800 on closing basis holds a lot of importance. So if we close above that today, we can definitely see an expiry somewhere near to 17,970, 18,000 key levels. But my view is going forward in this week with a lot of major Nifty 50 companies announcing their results, it's going to be a very important week. And on a downside, 17,600 April futures will be a make or break. So keep an eye over there. As long as we are holding it, you can definitely buy every dip.
All right, so buy every dip is the word coming in clearly when it comes to the Nifty. But also I'd like to understand your strategy right now for Bank Nifty. Do you think there is more resilience coming in there? And also before we deep dive into the FMCG basket overall and talk more about it, because tomorrow onwards we'll start looking at numbers coming in from the FMCG basket. What do you make out of Bank Nifty for that matter?
So I think Bank Nifty, after a couple of days of very bracketed or a narrow range move, I think is ready for a big move. And if we talk about the levels for Bank Nifty, and if you look at the closing that we had in April futures, it was somewhere around 42,150. So on the upside, 42,500 remains a big resistance, somewhere around 42,500 to 42,650. If we close above that today, considering the results of ICICI Bank have been good, and the pre-open itself shows an opening above 900 levels. So if we happen to close above this crucial zone, which is 42,650, I think we can expire somewhere above 43,000 April futures by Thursday, which should be a good expiry considering the 3 to 4 months of down move that we had. But the key level will be the key stock and the key contributor now has to be Axis Bank. If you look at Bank Nifty overall in the structure, I think HDFC Bank, ICICI, all of them have contributed. But Axis Bank has been a laggard, and 875 in spot has been a major resistance for this stock. So my eyes will be on that stock for this week and for the month of May. If we close above 875 back to back for 2 days, which is a basic technical term that we use, I think we can see a good move on this stock, and it can start catching up with the other movers and move up to levels above 900, 920. So that can be a big mover in Bank Nifty. My view for May is I will be more bullish on Bank Nifty as compared to Nifty. And if we get any good dip here in the next 4 or 5 days, I think Bank Nifty gives a better opportunity for the month of May.
All right, Prashant, I'm not sure if ICICI Bank features into the list of your profitable ideas for the day, but nevertheless, splendid set of numbers. Both the index heavyweights, RIL and ICICI Bank, they've both had a good show when it comes to the March quarter earnings. If the bulls don't have it today, after the strong show coming in from the index heavyweight, they can clearly kiss it goodbye, given that it's an F&O expiry week. But Prashant, you have 3 profitable ideas there.
Yeah, I think, Nickey, from an ICICI Bank perspective, I'll definitely share something for the viewers, which is if we close above, we are opening somewhere around 905 on spot. If we close above 915 today, 915 is a very crucial level. I think you can definitely go long, hold the stock in cash with a stop loss around 895, and you can look at targets around 940, 945. As far as my trading ideas are concerned, I think the strongest peak for the week, I think, is Divi's Labs. Keep an eye here. I would keep a stop loss at 3160 on closing basis. My target would be around 3365 to 3400. My next pick would be JSL, and I'll keep a stop loss at 254. My target would be around 285 to 290. And I think one more stock that I'm looking at is a small bank, bank. My stop loss would be 66 and my target would be 84.
All right, that's the word coming in. But let's quickly address bunch of stocks, of course, which are expected to be in focus. And the names out there would be including something in the like of ICICI Bank, HDFC Bank, Reliance Industries, Wipro, Sun Pharma. These are all the top line large cap stocks that are expected to be in the focus. So just in case if we are expecting some amount of, rally also coming in, it should be supported by the financials, of course, and the index heavyweight. But let's address ICICI Bank numbers first. The basic numbers on standalone basis. Net profit at 9,121 odd crore as compared to the poll of 8,972 crore. NII 17,666 crore as compared to the poll of around 112 crore. Net profitability is up by 30% too for ICICI Bank. And if you talk about the NII picture, it's up by 40% for that matter. Gross NPA too, sequentially, if you see, the number has come down for ICICI Bank. And also so is the case with the net NPA. In terms of just the percent out there, gross NPA stands at 2.8% as compared to a number of 3.07% sequentially. So is the case with even the net NPA at 0.48% in this quarter, that's the March quarter, as compared to 0.55% in the December quarter. Overall, if you see splendid set of number coming in from CLSA, from ICICI Bank, CLSA also suggests a buy rating, raises the target price to an extent of around 1,200 per share. Right now, the stock is quoting at 900 rupees. Says it's delivered impeccable for Q. Core PPOP growth has been driven by another 25 basis points sequentially, 19% YOY of NIM. Overall, the expansion which is taking place. They've also spoken about the management highlighting that it does not see growth or deposit challenges. So the commentary right now also is very encouraging when it comes to ICICI Bank. It expects the banks to use, CLSA expects the bank to use the high profitability phase to invest in more branches in FY 2024. Earning multiple at this point of time also seems to be undemanding. Reliance Industries out there. It's something you're just going to address the brokerage view out there. Jefferies is maintained by, and the target price of 301.25 rupees per share. Right now, the stock is trading around that 2,300 level, so there looks like a significant upside given what the brokerages are suggesting. They're suggesting an EBITDA beat, which is led by the oil to chemical division and the Geo retail business. Retail business performance, on the other hand, seems to be a tad lower to Jefferies as compared to the expectation. Retail's scorching space addition should aid a 30% EBITDA CAGR. Capex overall for retail division remains elevated, but Jio has generated healthy free cash flow, even as the capex at this point of time remains to be seen. But overall, broad-based growth coming in from Reliance Industries. We're going to be addressing in the markets. Like I keep saying, if the bulls don't get it today, if they're not driving any rally, you can't really expect much. So let's see how is the opening stacking up for you. Well, we are looking at gains coming in for the markets. 0.4% of gains coming in on that one. 17,685 level is what we're looking at. So clearly, comfortably above that 17,600 mark. Talk about the bank Nifty, ICICI Bank. Also, there is relief coming for HDFC and HDFC Bank. We're going to be addressing that just in a bit. 0.5% gains coming in even for Bank Nifty index overall in terms of the sectoral indices that we have. Just to see the flavor of where the other growth is coming from for the market, which seems to be really positive at this point of time. Despite the muted global setup, we are shining bright. Nifty IT index, well, there is a flat amount of buys there. Wipro has announced in buyback. Most probably it's going to be with a tender route because promoters can participate in. So Wipro is also expected to be the stock which is expected to be in focus. Metal index on that note. Metal index down and out for you. Losses to an extent of close to 0.5% out there. Remains to be seen how does this index stack up for you. Pharma, Sun Pharma is where there is more development coming in, which we are going to be addressing in just a bit for you. But Nifty Pharma index down and out with losses of around 1% odd. FMCG right now lackluster, flat with negative bias coming in for the markets when it comes to the FMCG basket overall. And if we talk about the auto index, that's where also we've seen some amount of selling pressure mounting up. Close to or more than 0.25% of losses coming in for the auto basket overall, and infra too at this point of time is holding up. So we are seeing positive momentum clearly. Like I said, it's the financials which is and the other rate sensitive realty index for that matter, 0.5% on that one itself. So we are seeing rate sensitives shining bright for you, and the market's doing well in the expiry week, with major index heavyweights actually delivering splendid set of numbers this over the weekend. Let's also look at the Nifty top gainers and top losers out there, just to see how does the trend stack up. ICICI Bank shining bright like we suggested. Wipro buyback announcement has probably led to the stock also reacting well. Tata Consumer Products is another one that we're looking at. And if you look at Reliance, that's where the broad-based growth has come in on the numbers, shining up and bright for you. Apollo Hospital, IndusInd Bank, these are some of the other top gainers that we have on our list. HDFC, UPL and SBI, these are some of the other top gainers. In terms of the losers out there, that's where we need to see advances and declines at this point of time. 24 advances, 26 declines. Sun Pharma, there's a negative development out there. GRL, BPCL, these are some of the other stocks that we have on our list this morning. So clearly, two stocks that I'd like to address before I get, before I get into a conversation with Neha Dave, our colleague who closely covers the entire financial space. Sun Pharma has gotten a non-compliance letter from US FDA. It's a Mohali facility. Corrective action have been sought at this facility. So these are two things. Actions have been sought before releasing final production batches in the US. So that's one parameter, also this counter that we'll be looking at. But let's actually, also get in Neha Dave, who is the analyst for MC Pro out there, having a close eye out on the financials out there, and ask her, how are the financials stacking up for ICICI Bank versus HDFC Bank? Good morning there, Neha.
Hi, good morning, Nickey.
All right, Neha, so I wanted to understand there is a margin compression which is happening in for the banking sector, if I may so say, at least when it talks about the sequential numbers. But for ICICI Bank, that hasn't been the case. And also, you've been reading into the financials closely for both, HDFC Bank and ICICI Bank, things that have stood out for you in both of these banks at this point of time.
Yes. largely what the expectations from the street is in terms of margin compression for the banking sector. But if you look at the numbers of ICICI Bank, we have seen the margins on the domestic book expanding, and it has hit above 5%. Now, this is an excellent performance on the margin front. Now, that said, the margins for ICICI Bank has peaked out in the current quarter. Management clearly indicated that the cost of funds or deposits will rise with a lag effect in the coming quarters. Despite the margins might compress going forward, if we compare ICICI Bank's margins with that of HDFC Bank, again, it's a very good performance because HDFC Bank's margins in the last quarter, that is Q4 FY23, stood at around 4.1%. Now, there is clearly ICICI Bank stands out and clearly an advantage or an edge which ICICI Bank has over HDFC Bank in terms of margins. And, this has been possible primarily because ICICI Bank has been growing its retail book since past many quarters, while HDFC Bank in between couple of years was focusing on corporate book, which is relatively lower yielding as compared to the retail book.
All right. So apart from the NII growth and the NIMs, overall, if you talk about just the profitability too, Neha, I'm seeing just a comparative analysis data that, you've given us this far. 30% for ICICI Bank and 20% for HDFC Bank. And also the deposit growth, however, that I'm noticing, 11% for ICICI Bank and 21% for HDFC Bank out there. So could you explain that a little bit more before we deep dive into HDFC and the regulatory developments which have come in for HDFC?
Yes. So if we talk about the earnings growth, ICICI Bank's earnings growth has been far better than HDFC Bank in the past whole 1 year. And what has driven this earnings growth is obviously the strong margins and lower provisions, obviously. Now, if you look at the 30% earnings growth which ICICI Bank reported in this quarter, this 30% earnings growth came despite the bank creating additional contingent provisions of around 1,600 crore, which is not required as such as by the regulatory requirements. So if the bank had not created this contingent provisions, their earnings growth would have been much higher than 30% also. So clearly, ICICI Bank stands out in terms of earnings growth. Another important thing between the two banks which is to be noted is on the contingent provisions front. Because the earnings has been growing at a very good rate for ICICI Bank, they have been creating contingent provisions since past many quarters, which currently now or cumulatively now stands at around 13,100 crore, which is equivalent to 1.3% of its loan book. Now, the same contingent provisions for HDFC Bank is around 0.7% of its loan book. So again, ICICI Bank is very well placed on contingent provision front, and which will actually help in containing the future credit cost going forward. Now, talking about the deposit growth, where ICICI Bank lags HDFC Bank and even the banking industry in terms of the deposit growth. So deposit is something which has been a concern area for the banking industry because there is a gap between credit and deposit growth of the entire industry, deposit growth lagging the credit growth. Now, HDFC Bank has been exception on this front. Their deposit growth has grown at double the rate of industry deposit growth. One of the reasons for the same is that HDFC Bank has been opening branches very aggressively in the past 1 year. And also because it has to meet certain liquidity requirements post the merger. So it has been very aggressive on garnering deposits. So obviously HDFC Bank is better placed on deposit front as compared to ICICI Bank. But on all other parameters like margins, on contingent provisions, on earnings growth, ICICI Bank is well ahead of HDFC Bank.
All right, point well taken in terms of the contingent provision along with the earning, but however, deposit is where HDFC Bank has an edge over ICICI Bank. But a little bit, 30 seconds on this one, Neha, before we graduate on to our next fundamental guest out there. There is a relief coming in overall for HDFC and HDFC Bank merger out there with, HDFC Bank recently saying that it's received the clarification from the banking regulator with respect to the proposed merger with HDFC. And after that, the bank has sought certain relaxations to make the process of the merger smoother, which is expected to take in effect earlier in July this year. Your 30 seconds on this one, please. Neha?
Yeah, sorry, I missed the last part. Your voice wasn't
Sure.
very clear.
Your assessment on the entire mergent scenario and the clarification and the relaxations that have come in by the RBI to HDFC and HDFC Bank out there.
Yes. So yeah, the RBI's clarifications in respect of the relaxations which were sought by HDFC Bank are clearly positive for the stock. Though there are certain areas where RBI has clearly not given any leeway. That is, for example, in meeting the CRR, SLR and liquidity coverage ratio, the merged entity has to meet that regulatory requirements from the day one of the merger. Now, but HDFC Bank is very well placed on this front because if you look into the SLR requirement, currently it is 18%. HDFC Bank is already carrying SLR of more than 24 to 25% as per the management. Moreover, the HDFC Limited, which is the NBFC which is getting merged, also carries liquidity in form of holding government securities, which would be around 55,000 crores as of December. So overall, though RBI has not given some leeway in CRR, SLR, and liquidity coverage, HDFC Bank is well placed. Another area where the RBI has given some breathing space to the bank is in terms of priority sector norms. Now, this is something which is very difficult to meet, and RBI has clearly given some time for the merged entity to meet that requirement. Typically, priority sector requirements are to be met or kicks in after 12 months after the date of the effective merger. Now, here clearly RBI is saying that in the first year, only 1/3 of the book will be considered to merged entity will be considered to meet the PSL requirement. So, which is clearly a positive thing for HDFC Bank. And management indicated that they will look at both organic and inorganic way of growing the priority sector lending in that 12 months time. And so that is, overall it has been positive. And third most important thing which RBI clarified is that it can continue holding the investment in the subsidiaries. So clearly HDFC will look at increasing the stake in HDFC Life, the insurance entities. And management again here indicated that it could be through open market or it could be some fund infusion. But that again is clearly a positive for the stock. Overall, it's a positive.
Sure. Neha, point is well taken and also well put out there. A positive development coming in for the HDFC and the HDFC Bank out there. Some relief coming in the priority sector lending, but overall the SLR and the CRR requirements need to be just in the way it is for the other banking sector out there. Neha, thank you so much for taking out the time and joining us this morning. Next in the list, we are being joined by Jigar Mistry, the co-founder of Buoyant Capital out there. Good morning, Jigar. Sorry to keep you waiting for this long. We were having a quick chat about the ICICI Bank and the HDFC Bank. How are the comparative financials looking like? Splendid set of numbers for ICICI Bank. Let's also look at how stock has been doing, in terms of the ICICI Bank performance out there. But Jigar, coming to you, what do you make out of it? And do you expect the financial space to be the pocket of growth coming in entirely for the Nifty basket overall when it comes to the earnings season this time around?
Yes, Nickey, good morning. Thank you for inviting.
Pleasure.
Excuse me. Thank you for inviting me to your show again. See, I think this was the quarter of many firsts for ICICI Bank, right? The first time I think their loan book has crossed 10 lakh crores. Secondly, I think in as far as I can remember, this is the first time or first in many quarters and years where their ROE, 4Q ROE is higher than HDFC Bank's ROE, right? Their ROA has been higher for, I think, last 2-3 quarters. But this is the first time the ROE has surpassed. And lastly, if you look at the F23 sort of provisions that ICICI Bank has done, that's come out a tad bit lower than what HDFC has provided for. So I think it's sort of a reasonably large turnaround. If you were to take a step back and look at it over the 5-6 years, say FY18 versus say FY 2023, then ICICI's ROA has moved up quite dramatically. In fact, from 0.8% to almost something like 2.25%. Whereas that of HDFC has broadly remained stable. I think it was somewhere around 1.9 that continues to be around 2%. And the large reason for this is twofold. I think the first part, provisionings for ICICI Bank have gone down. And whereas, for HDFC has more or less stayed flat. So I think over the past, I think 5-6 years, or rather, especially over the last year, you've seen ICICI Bank sort of emerge as the industry leader, both in terms of growth in the book, in terms of the spreads, in terms of margins, in terms of employee additions. I look at the numbers and see 1.03 lakh crore goes up to almost, 1.03 lakhs goes to almost 1.3 lakh employees. So they've added a reasonably large number as well. So I think things are looking very well. We always keep, when we discuss banks, we talk about these 4 cycles: credit growth cycle, your NIM cycle, credit cost cycle, and valuation cycle. Across the board, I think ICICI is now emerging as the leader in the pack. So credit growth at 18.7% is higher, almost industry leading for this quarter. Secondly, NIM cycle, your colleague mentioned that it's sort of at 40% YOY. It's among the highest in the industry that's seen so far. Your credit cost cycle, surprisingly, is emerging as sort of industry low as well, lower than HDFC Bank for sure this quarter. And if you look at valuations, then clearly see the valuations have moved up. It's now trading at something like 3% discount to the merged HDFC Bank, 3% discount on price to book, 15% discount on price to earnings. But if you look at the growth, and I think where the consensus numbers are, people are sort of looking, or rather the consensus analysts are expecting FY23, profits of 29,000 crore to go almost as high as 50,000 crores by F26. Your book value will increase from, say, 280 odd to 460. By FY26, your subsidiaries are valued anywhere between 140 to 150, depending on which analyst numbers you're talking about. So bank trading at 2.3 times, almost, other than NIM, I think most other cycles would continue to remain reasonably favorable. So very, very difficult to choose from, but both, ICICI and HDFC look reasonably interesting despite the very good run. And I think financials can continue to rule the roost. Just a point of sort of disclaimer here, as the fund that we run, we are interested in both these names. In fact, they feature within the top 3 holdings of the fund.
Sure, Jigar, one point that I would want to, probably put in there, you spoke about, ICICI Bank being the market leader, right? But when you talk about the deposit growth rate there, at least when it comes in this quarter YOY, that's where HDFC Bank has the edge over ICICI Bank, and it comes at a time where, the entire deposit scenario seems to be a little bit of a trouble, if I may so say. How do you look at it at this point of time? Do you think that the trend is expected to reverse for ICICI Bank, and probably they will clinch in more amount of deposit growth there? How do you look at it?
Yes, so if you look at even within that, Nickey, the split between, say, a CASA and the TD so CASA growth, if I'm not mistaken, came in around 4 to 5%, which is the lowest in many quarters that we have seen for ICICI Bank, but the TD growth has been reasonably good. I think in trying to gear up for the merger, HDFC Bank has been leading. If I remember right, again, it garnered close to 1.5 lakh crores of deposit at 20% industry market share on deposit. That's a reasonably large number. So yes, I think, things are sort of better for HDFC Bank there. But you look at, both in terms of where the CD ratio stands for both the banks, and liquidity continues. LCR, I think, moved up for ICICI from 121 to 127, again, if I remember right. But those are sort of, yes, at the margin, because we don't have, the larger issues to focus on, we could sort of discuss whether, credit sort of the credit deposit ratio will continue to hold at the pace or not. But I think given that NIMs have expanded, I think at 4.9 is an all-time high for ICICI Bank. And you would argue that, they will give in a certain bit of that over the next few quarters in trying to, ramp up the deposits. There is savings going around, right? And given what's really incrementally changed for mutual funds vis-a-vis banks, I think incrementally it might be a little bit easier for a lot of savings to get channeled to term deposit, at least if not CASA. And therefore, over a longer period of time, I don't really see them as big concerns.
All right, Jigar, I would want to understand your assessment on the some amount of regulatory relief which is coming for HDFC and HDFC Bank merger out there. Your assessment, on that one. And B, since we are running out of time, I would also want to squeeze in Wipro's buyback announcement, which has come through, right? It's one of the top gainers that we have on the Nifty 50 index right now. Do you think this is just the start of the buyback season? It's the Q4, for most of the IT companies, right? So do you expect more announcement coming in from the other companies? Even if you talk about Wipro, Jigar, just from the time from where it's, pandemic's lows, and it's almost corrected at 50% from the period around that, so much so that people just forgotten that Wipro is one of the top large cap IT name out there. Do you think this buyback announcement will offer any sort of relief coming in for Wipro? Clearly on charts, yes, but how would you assess it?
Right. So first question, to answer to your first question, Nickey, I think, yes, regulatory dispensation, the one that has been provided, I think the street would have been happier if they could have the SLR, CRR as well. But I think we'll take whatever we get here. And I think, as your colleague also mentioned previously, they have been gearing up to take care of, what happens when the merger does take place. So it's not something that's sprung upon to them. They have been ready for the merger for a fairly long period of time. And I think they'll take it under their stride. Business fundamentals continue to remain decent. To answer your second question, again, an interested stock which we are interested in. So, regulatory disclaimer there. But, Viral from our team tracks IT much more closely. But what I have heard him say so far is that, the tech companies in India, if your top two companies are guiding for, challenges ahead, then I think the rest of the pack, unless you are operating into a very niche segment, right? For example, one of the stocks that we do own is Science. That company reported numbers and they operate into a very niche ER&D space where growth can come through. Or Mastech, which is not something that we do own, but they are they reported numbers and their numbers were fairly good as well. But they are again operating in a very niche space, right? So unless that comes through, I think we are much more aligned to paint the, big banner IT companies with the same brush. If growth hasn't come through, in the previous cycle, then that's typical cyclical behavior catches on. But it's not a place where, you are looking for a double-digit growth at the top line for at least 2 years now, if I heard that right in the morning meetings. In that scenario, valuations have corrected, they've corrected still to a level where, if you exclude those COVID years, then you are broadly at, I think, a 5-year average, adjusting for that. So it's not really tempting as we go ahead still. Wipro, I think, last announced buyback in the year 2020. So it's been 2 years since they've done it. And that might, be more like a capital allocation decision than anything else. So, generally not too keen on tech per se, but Wipro, we have a small exposure there. So.
All right, so not really. Okay, but the word coming in is probably brokerages across are sensing that this is going to be through tender route, which has been the scenario which is painted or has played out for the last 3 instances when it comes to Wipro, because that's the route where even promoter can probably step into and buy the equity, buy back the equity out there, or participate into the process overall. But Jigar, thank you so much for joining us. And, we'll just wrap up this edition altogether and wish you all a very good Monday out there. It's a long week, expiry week, numbers coming in, Nifty 50, slew of numbers coming in. But with this, it's a goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us in the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.